here's the Apple, left elbow gap down. We will make a price in here. We're at 0 on the intraday range, 0 to 5. What has to qualify right there at that teeny is that that's got to shoot off of 0 to 10, 15 very quickly in spikes, because that's going to show the commitment of the people who are going to be buying on the dip. That bull right here, the TQQ right here, this is going down, so naturally we're going to see if we can get made right here. This is the kind of spike you're looking for. See how it was down there at 0? It tells you right here. So you want that spike in that IR, and we're going to take a look. That bear has got more momentum over here, this bear chart right here. So let's take a look at that compared to what Apple's doing. When that's breaking higher, we're kind of breaking down here. The other thing that you got to be aware of is that this month, going into the earnings season, wouldn't be a bit surprised for me to see the broader indexes drop 10%. Because we're too overbought going into an earnings season. I'm sorry. I've been doing it too long. And the thing about it is, it just isn't going to hold mud. So that's where that right elbow gap on the bear made its high. It's come down. Then we've been only open. We haven't hit the 20-minute rule. So we want to keep our eyes on these. And here's, on the other hand, in the same video, you can see where the bull is trying to get some prices. You can see where Apple's trying to get some prices. You can also see over here that Apple's intraday range is popping. Now, if I want to look at the broader market in the right kind of way, I go to my platform and I get to do this. I know where my indexes are. The VIX is down now minus, and the Dow is turned around 100%. That's the shift. There's the Nasdaq. So they're coming in off of there, and equities are, you can see right here, and you can see the VXN. And basically what we're going to do is make sure that these numbers are correct. However, we are going in. That means that the fear indicator is at the low. That means that the bear is coming down, and the bull is trying to make its move up off the bottom. Okay, and the Dow and this is Nasdaq 100 is running strong. That's where the dip buyers come in. That's where you want to be getting long up off the bottom. And that bull right there just shot straight up 1, 2, 3 damn teenies. Okay, and that's what we call a flash trade. But nonetheless, if I am smart, I can see the very, very same thing happen here, folks. That's your bear coming right down to that mathematical market maker price, right to the penny, and that's the engulfing of the bull. You can see how they just made their move right along here with the indexes, MMTs, and for the people in the free 5-day trial, this is what happens in the first 20 minutes. So basically you had a lot of dip buyers that came in. There was some short covering in that first 10 minutes when they didn't want to continue to break lower. What ended up happening is that we got it correctly. Ken Flagg, you're up $336 on that engulfing bar. So once again, the MMTs make their money every day on bear and bull opens. I want a stop market. I got to clear that teeny, let that thing thrombone. As long as it's thromboning, you let it stay. Take a look at the readings, Mr. Flagg. And once again, put that stop market. You got to clear that teeny. If you don't clear that teeny, then you're not getting your rocks off there. So what I mean is that you got to go through them teeny lines in order to get across that bedrock. And basically that dip buyer came in, and we've only been open 3, 6, 9, 12, 15. But what I want you to look at, Flag, over here, if I'm going to get made on that bear, so somewhere I'm going to buy that bear. I want them profits kept. You hear me? So then you start coming out of 200. Hey, if you start getting made down here, that's support for the bear. That's resistance for the bull. And let me tell you something. You can sell into half of it. Take the money.